Good morning, I'm Lauren Hayes for the Finance News Network. The Nasdaq and S&P 500 slid Wednesday as traders assessed disappointing earnings from tech giants Microsoft and Alphabet. The Nasdaq has now lost over 29% of its value this year versus a 19% decline in the broad-based S&P 500. Technology companies, of course, were some of the biggest winners during COVID. The tech sector accounts for more than a quarter of the S&P 500 index, giving it an outsized influence on the market as a whole. Alphabet, Amazon, Apple and Microsoft together account for nearly a fifth of the index's value. Overnight, the Nasdaq dropped 2%, the S&P 500 lost 0.7%, the 30-stock Dow Jones Industrial Average traded flat. Earlier in the day, the Dow rallied more than 300 points as Visa buoyed the index on strong earnings. The S&P 500 was also positive. The swings in the major indexes reflect a tug of war between corporate America and the Federal Reserve that has left investors attempting to balance what companies are reporting and what that means for future interest rate hikes. Shares of Google parent Alphabet dropped 9% after the tech giant missed expectations on the top and bottom lines. Alphabet also reported a decline in YouTube ad revenue, which spurred investors to deliberate the outlook for other tech companies that rely on ad spending. Meanwhile, Microsoft declined about 7% after the tech giant reported weaker than expected cloud revenue in its latest quarterly results, despite beating earnings and revenue estimates. The company also issued current quarter revenue guidance that fell short of expectations. Meta Platforms reported results were in line, but the stock still fell 5% alongside Atlassian, which was down 5%, and Amazon, which lost 4%. Across the sectors, utilities and real estate traded slightly negative late in the day. They joined consumer discretionary, communication services and technology in the red. Within the sectors, of note is the performance of the biotech stocks over the last 18 months, in particular post the COVID-related boom. Biotechs soared during the pandemic, with non-specialist investors and hedge funds piling in, pushing up valuations and funding large swathes of startups. With a broad-based 40% pullback in the Nasdaq Biotech Index, investors are looking at cheap valuations supported by positive data. And while biotech deals like IPOs and capital raisings have fallen off a cliff, Big Pharma is currently sitting on a $300 billion war chest. The conditions now appear ripe for an M&A boom, as biotechs are usually bought out by Big Pharma, who have the financial muscle to fund large phase 3 clinical trials and commercialise successful treatments. On the currency front, one Australian dollar has strengthened compared to the US dollar yesterday, buying 64.92 US cents. Now to commodities, the iron ore futures are pointing to a 1% fall. Gold gained 0.7%, silver added 0.7%, copper jumped 4.3% and oil gained 3.3%. The SPI futures are pointing to a 0.4% gain. I'm Lauren Hayes. Have a great day.